So we told you earlier how currency trading is driving the stock market. That raises a very important question. What's driving currencies? Sara Eisen is here to explain a bit about that. Sara?
Well, Eric, while stocks are being driven by the dollar, plenty of currency strategists will actually tell you that currencies are being driven by stocks. And while that correlation is very strong right now,
Sounds like
we
a
saw
terrible
that
feedback loop, actually.
it's the chicken or the egg. And when we saw that correlation very strong, there are signs that other factors are starting to matter more for currency investors. Take interest rates. Interest rates are becoming very important. It's a historical driver of currencies. Look no further than Australia's dollar rising 30% so far this year, thanks in part to the fact that its central bank became the first major central bank to lift interest rates, so traders are really chasing those high yields there. Another factor, economic data. Better economic numbers in countries drives investors into these countries. Foreign investment flows. It also raises anticipation for higher interest rates. You see it in Brazil. Its economy has held up very relatively well, and that has given a big boost to the Brazilian real. Finally, technicals. You cannot talk about currencies without talking about technical drivers. And in fact, a recent example is the euro dollar, because a lot of strategists attribute that move all the way up to 150 to breaching that key 144 level. So technicals, another major driver. Bottom line here, stocks are still fueling a lot of the currency trade right now, but a lot of these other factors are starting to matter more. And some say that the stock currency inverse correlation in the currency world is not going to last forever. In fact, it could break down in the next few months.
So let's say that it does break down. What does that mean for the dollar?
Well, it could mean the dollar would get a boost. Plenty of strategists are saying it could be just what the dollar needs, in fact, because then traders will focus more on the Federal Reserve, on its policy, on the better economic data coming out of the U.S., on the idea that the U.S. will actually lead the major economies out of recession, and that should be good news for the dollar. So when that correlation breaks, expect to see that.
Some great perspective. It's so important figuring out what happens to the dollar, because we're keeping it in mind as we wonder whether that dollar strength is going to lead to ever weaker stocks.
Exactly.
Thanks, Sara.